Hello everyone, thank you for joining us. We are Globo Cobras Asset Management LLC. Today my colleague Pedro and I are here to talk about the investment strategy that we created for the wealthy and the sophisticated investors to help them beat the market. Pedro, why don't you talk a little bit about this investment strategy?
Thanks, Aditi. So our strategy is meant for those investors who want to invest money on the market and track the market but don't want to expose themselves to that risk. It has two components, an active and a passive one. On one side, for every $100 we invest on the market, we will also invest 45 cents on stocks that we consider cheap. On the other hand, we will short 45 cents for every stock we consider expensive. The criteria we define for expensive or cheap is the book equity to market equity ratio. So stocks with a low book equity to market equity ratio are considered growth stocks. Now, on that concept, we will consider them as expensive. On the other hand, those that are distressed companies with a high book equity to market equity ratio, we expect them to get higher returns. And for that, we're leveraging our assets on those. And our strategy has relatively low cost. We will only charge 1% of management fee. And when it comes to trading, there's only $0.01 for every trade we do. Okay, so the time frame we decided for this strategy is from November 2005 to September 2018. And when we screened the expensive and cheap industries, we found the following. The industry that we think will give the most returns on this time frame will be beer, food, smoke, and tobacco, not to include guns as well. On the other side, we consider that the industries we should short because they have a low book to equity market ratio are the real estate industry and the other industry, which comprises any types of services that are not comprised on the other. Okay, so let's take a look at our results. They are a success. When we see the average returns of our strategy, we see that they're almost 8% above the returns of the S&P 500. Not to mention that we've done this with a Sharpe ratio of almost 1, when the market had a Sharpe ratio of 0.63. We've had a significant alpha of 0.99, that's an annual basis, and as you see on the 2008 crisis, we've done better than the S&P 500. This is because with our short and long overlay, we've reduced market exposure from 1 to 0.68. And this is also a significant beta. Finally, when we talk about appraisal ratios, we see that we have almost a 15% appraisal ratio for the alpha. This is better than the average investment strategy.
Thank you so much, Pedro. And also considering our alpha is so high, which is at 9%, investing with us is practically free. So I hope we convinced you to invest with Globo Cobras Asset Management. And thank you for giving us your time and joining us today.